Alright, so I've got my charts open right now, and I want to show you something that I think is one of the most powerful concepts in trading, especially if you're just starting out. It's called a fair value gap, and once you see it, you're going to start noticing it everywhere on your charts. So let me just jump straight into it. Okay, so I'm on the NASDAQ futures right now, 5-minute chart, and what I want to do first is just explain what we're actually looking at and why this works. Because a lot of people throw this concept around without really explaining the logic behind it. So basically, a fair value gap forms when price moves so fast in one direction that it completely skips over certain price levels. Like price just jumps. And those skipped levels, that gap it leaves behind, that's your fair value gap. And here's why that matters. The market is constantly trying to be efficient. It wants to go back and revisit the levels it skipped. So when you see a fair value gap on a chart, there's a really good chance price is going to come back to that area at some point. And that's exactly what we're going to trade. Now let me show you what this actually looks like. See this candle right here, this big aggressive move pushing upward. That's the one we care about. Now look at the candle before it and the candle after it. Here's the rule. Look at the high of the first candle. Now look at the low of the third candle. If those two don't overlap, if there's a visible gap between them, that's your fair value gap right there. I'm just going to draw a rectangle over it. Top of the box sits at the low of that third candle. Bottom of the box sits at the high of the first candle. And that zone, that box, is what we're watching. Now one thing I want to be really clear about. Not every fair value gap is worth trading. The ones I want to see are the ones that form after a really strong, aggressive move. Like price just launched in one direction with serious power behind it. If price kind of drifted up slowly and left a tiny little gap, I'm not interested in that. The move needs to be obvious. The gap needs to be obvious. If you're zooming in just to find it, skip it. Move on. Alright, so now we have our fair value gap marked. What do we do now? We wait. That's it. We just wait for price to come back to that zone. We don't chase price. We don't jump in because the market is moving. We just sit back and let price come to us. And look, sometimes price never comes back. It just keeps running. And that's completely fine. We don't force trades. If price doesn't return to our zone we identified, we just don't trade it. There's always another setup. But when price does come back into that zone, that's when it gets interesting. So here, you can see price has been moving up after that initial impulse. And now it's starting to pull back. It's coming back down toward our fair value gap box. Now this is the part most beginners mess up. They see price entering the zone, and they just immediately buy. Don't do that. Alright, real quick. I want to talk about something that I think is actually perfect for anyone who's still learning to trade. It's called Alertsify. And the reason I'm bringing this up in a video about fair value gaps specifically is because one of the biggest struggles when you're starting out is this. You understand the strategy, but you're still not consistent yet. You're still learning. And that takes time. So what if you could actually make money while you're going through that learning process? That's basically what Alertsify lets you do. Here's how it works. There's a leaderboard of professional traders, and every single one of their trades is verified directly from their broker. Not screenshots. Not someone posting a picture of a green trade on Twitter. Actual broker-verified fills. Every stat, every trade, every result, pulled straight from the broker. You can't fake that. And that's exactly what makes this different from every other signal service out there. So when one of those traders takes a trade, Alertsify auto-executes that exact same trade into your own broker account in under a second. Like literally under a second. By the time you even see the alert on your phone, you're already in the trade. And I know what some of you are thinking. $2,000 is a lot. And yeah, the Pro plan is a $1,997 founder's fee plus $99 a month. I'm not going to pretend that's cheap. But here's the thing. Most people make that back within the first month just from copying the traders on the platform. They've got over $183 million in verified trading volume and $16.8 million in subscriber P&L on the platform. Those aren't made-up numbers. Those are pulled from real broker fills. Plus, it's got over 235-star reviews on WAP. So the results are clearly speaking for themselves. The link is in the description. Go check it out. Browse the leaderboard for free and see for yourself. And if you do decide to sign up, The link down below supports the channel, which helps me keep making these videos for free. Alright, back to the charts. You need to wait for confirmation first. What you're looking for is a strong candle closing back up in the direction of the original move. So price comes into the zone, slows down, and then you get a solid green candle closing back upward. That's buyers stepping in and defending that level. That's your signal. Right there. See that green candle forming inside the zone and closing back up. That's the entry. That's where you get in. Now the moment you're in, stop loss goes just below the bottom of that fair value gap box, just a little bit below it. If price blows through the zone and closes below it, the setup is invalid and you want out. Small loss, move on. Take profit is set at 2 times your risk. So whatever your stop loss distance is, double it for your target. That's your 2R. Simple. And look at what happens. Price pushes right back up and runs straight to the target. Clean. Now let me flip it and show you the bearish side, because it works exactly the same way, just in the opposite direction. So here you can see a sharp, aggressive move pushing downward. Big red candle. Strong selling pressure. Now look at the candle before it and the candle after it. The high of the third candle doesn't overlap with the low of the first candle. Clear gap right there. I'm drawing my box. Top of the box at the low of candle 1, bottom at the high of candle 3. That's our bearish fair value gap. Now we wait for price to retrace back up into that zone. And here it comes. Price bounces and starts pushing back up into the box. We wait for confirmation. And there it is. A strong red candle closing back downward inside the zone. Sellers are defending that level. That's the entry. Short trade. Stop loss just above the top of the box. Take profit at 2R and price drops, hits the target. Done. Now before you run off and start trading this, 2 things I need you to remember. First, always trade with the trend. Check your higher time frame before anything else. If the market is in an uptrend, you're only looking for bullish fair value gaps. If it's in a downtrend, bearish only. Don't fight the trend, ever. Second, this isn't going to work every single time. Some trades are going to fail. Price is going to enter the zone and just blow straight through it. That's normal. That's trading. The stop loss handles it. And because you're targeting 2R on every trade, 1 winner more than covers 2 losses. So you don't need to be right all the time. You just need to be consistent. That's really all there is to it. Go open TradingView right now. It's free. Pull up any chart and just start looking for those 3 candle patterns after a strong, impulsive move. Mark the gap. Watch what price does when it returns. Do that for a week without trading it live. Just watch. By the time you're done, you'll be able to spot these in seconds. And if this helped you, hit subscribe. Every week I'm on the charts breaking down exactly how I trade, step by step, keeping it as simple as possible. See you in the next one.